So anybody who's ever gotten a paycheck knows that we're all partners with the government, right? When you look at that withholding and that FICA and you go, why are they taking all this money out of my check? Well, that's your partner that's taking the money out of your check. Now, it's not a really fair partnership because in that case, you're a silent partner. You don't get any say except in who you elect.
And they get a top line rev share, like into perpetuity. I mean, it's
exactly. They get it through
best deal
death
ever.
and after death. Okay. Let's not forget there's an estate tax too. So they get gift tax, they get estate tax, they get excise taxes. I mean, everything is taxed. But here's the thing, you don't have to be a silent partner. This is what I think is fun about the tax law. And that's really what tax-free wealth is about, is that you don't have to be silent. You choose to be silent. Okay. And you may choose to be silent just because you choose to be ignorant of how the tax law works, but one way or another, you're choosing to be a silent partner. You could choose to be an active partner. If you look at, there's been a lot of comments lately about Jeff Bezos and Elon Musk and these rich guys who don't pay tax. Even back in the 2012 election, and Mitt Romney was running against Barack Obama, and Warren Buffett says, hey, I pay a lower tax rate than my secretary. And I'm going, well, of course you do. You make your money as a big business that is something that the government wants you to do because they want all your employment, right? In exchange, all your employees pay the taxes. So you're not paying those taxes. Your employees are paying the taxes, but you're creating the employment. And the government says, look, we need jobs. So jobs is number one. That's the most highly incentivized activity that we have, is creating jobs. So that's why big businesses pay much lower tax. Big business owners pay much lower tax. Another one is real estate. Okay, one that I know you're very active in, Justin, is, look, we need housing. We need commercial buildings. We need, let me tell you, we need self-storage because people are hoarders. So we need this real estate. We need convenience stores because we need places for people to fill up their cars, and now we're putting in charging stations at those convenience stores, right? So we need that. So what we'd like to do is we'll give you an incentive to risk your money, because it is a risk, right? You're taking a risk with your money. You're not putting it into the savings account. You're not putting it into a mutual fund. Those are very low risk investments. Instead, you're putting it into high risk business opportunity, or high risk real estate opportunity, or high risk farming opportunity, for example. And what happens is, if you do that, the government says, look, we'll contribute part of that initial investment and part of the ongoing investment. But guess what? Once you start turning profit, we're going to take a portion of that. So if you look at Jeff Bezos as an example, and Amazon didn't pay taxes for many years. Well, they had billions of dollars of losses. Okay, well, why would they be paying taxes when they're losing money? We have a net income tax. We don't have it's not a sales tax, it's not a value added tax. We have a net income tax, which means that if you don't make money, you don't have to pay tax. Well, Jeff Bezos didn't make money for many, many, many years in Amazon. Now he starts to make a profit, and guess what? Amazon's paying high taxes, right? If you look at their current tax rate, it's a pretty decent sized tax rate. Same thing's true with Tesla. Tesla's been losing money. Tesla doesn't pay taxes. Another thing the government incentivizes is research and development. Again, Amazon and Tesla do a lot of research and development. Well, not only do we get deductions, we get credits for those. So it's just like you say, Justin, the tax law is really a roadmap. I look at it as a roadmap to tell you how to reduce your taxes. And I think that if you're an active partner, I think you're very patriotic. If you want to just pay your tax and be a silent partner, great. You can be patriotic that way. If you want to be patriotic and do what the government wants you to do, great. You can be patriotic that way. Let me tell you, it's interesting. I'm writing a new book and I'm looking at 7 different investments. And the one investment that doesn't pay the government is retirement funds. It doesn't do the government makes no money on retirement funds. They make money on everything else. They make money on business, real estate, oil, solar, agriculture, even insurance they make money on. They don't make money on retirement plans. So it's really interesting, this idea of, you go to school, get a job, and put your money in 401k and mutual funds. That's the one thing. That's probably the least patriotic thing you can do as far as the government goes, because you get a tax break, but the government gets no tax benefit. Everything else, the government's going to share in those revenues a lot more down the road than they do in the retirement plans. I found that interesting. As I was writing this book, I didn't know what I was going to get, right? Because you write a book and you have this idea, and then I start writing this book, and I'm going, wow, the government gets a lot. I had to go back and write all of what the government gets. What's fascinating is the government actually does much better on these investments than the taxpayer does. So don't think that these are tax dodges. These are not. These are things the government wants you to do. They're paying you to do it, and they get a huge benefit as a result.